The biggest trading mistakes. In this video, you're going to learn the biggest trading mistakes that options traders make. The first trading mistake that many traders make is that they trade way too often. I understand that Tasty Trade encourages people to trade small and trade often. However, I believe that virtually all Tasty traders will end up in a margin call and they'll be forced to close out their positions at the most inopportune time. A far better strategy is to make sure that you only trade the best opportunities that you have in front of you. There's an old saying about maximizing your happiness, and it says, do what you can with what you have where you are. And in many situations, traders do not do what they can with what they have where they are. Instead, they try to force trades. And it's usually those trades that they end up forcing, that they know that they shouldn't make, that end up biting them in the butt. So definitely the first trading mistake is that you should not trade too often. Just having 2 or 3 positions open at one time is oftentimes more than enough. The second trading mistake that I see people make is that they trade too large and they trade too big. Even if you're winning 90 to 95% of your trades, it only takes one really bad situation where the market pulls back 10 or 15% in 2 weeks for you to be forced in a margin call and for you to have to close out your positions at a very large loss. Remember, if you end up winning over 95% of your trades, then that means that the magnitude of the losses that you incur for the trades that you don't win are going to be larger than the average win that you experience as well. You have to make sure that you reduce your risk and you mitigate your portfolio volatility for the trades that you don't win. And frequently what happens, especially with inexperienced traders, is that they end up trading way too large and then they succumb to the correlation risk when the market pulls back, and then they're forced to close out their positions at the most inopportune time. The next biggest mistake that I see is many traders are not buying options. You need to buy options in order to protect and mitigate portfolio volatility. This is extremely important. And finally, the last mistake that I see is traders having unrealistic expectations. The probability that you're going to be able to turn $500 into $50,000 is virtually zero. It's better for you to go to a casino than for you to take outlandish risk, then ride the ups and the downs of being on an emotional roller coaster. The probability of you turning a little bit of money into a large amount of money when trading is very low. You're much better off hitting singles, trying to earn about 25 to 30% every single year, minimizing your portfolio volatility, and spending about 10 to 15 minutes a day trading, and the rest of the time you're working on your main job or your side hustle. By doing it the right way, then trading will be a great source of incremental wealth where you can layer it on top of your existing job or on top of your side hustle. And when you combine and aggregate all your incomes together, then trading can be an amazing way for you to boost your income overall. But just make sure that you avoid these mistakes. David Jaffe with beststockstrategy.com. Visit beststockstrategy.com, enter in your email address, and receive over $400 of valuable free training. Please watch this video right here because YouTube believes that you would enjoy it the most.